Good afternoon. This is Adam Tuiaana with RJO Futures in Chicago. Today is Wednesday, February 20th, 2013, with your afternoon soft commodities wrap-up of the commodities market. Starting off with cocoa, which last traded $20.99, right under that 21 level, which puts it down 30 ticks on the day. Reported very large supply of Ivory Coast port arrivals, a lot bigger than they were this time last year, so that's pretty bearish. We've also violated the 21.55 level in the March contract, so that is pretty negative. In addition to that, we're seeing that the momentum is really staying the same. While the price action moves lower and violates that 21 level, the momentum is staying at the same levels, which shows that there's still possibly some selling to be had. And I don't quite think, in my opinion, that cocoa is oversold at this time. It's been on a nice trend downward. So I am continued bearish. There is some expectations out about the euro grindings that are going to be coming out. They're due out in April, so we'll have to see what happens with those. It's not really moving the market in one way or the other. It's continuing on its trend. So until that happens around April and we find out what those grinding numbers are, we're going to stay bearish. I'm going to advise clients to remain bearish on cocoa. Moving right over to coffee, it last traded at 141.50, which puts it up 310 on the day, a very big day for coffee. The last video that I had, we were talking about cocoa, or coffee I should say, in the mid 130 area, that it would find its way down there. It last traded, of course, at 141.50, but the low this week was 137.60. So it has, in fact, made it down in that March contract to the 130, the mid 130 levels. So although Roya fungus continues to be a major issue, I believe it's going to be long term, and it's really affecting a lot of crops reportedly out of Guatemala, Costa Rica, Mexico, to the point where the Costa Rican government came out and they said we're going to go ahead and give $2 billion to farmers that are out there, because the fungicides to fight off the Roya fungus are rather expensive. And not only that, but it's a very easy fungus to go from leaf to leaf, so they actually have to get out there and prune a lot of the leaves that have been affected. So that's very labor intensive, very costly. So farmers getting the support they need to try and slow down the Roya fungus. But I think that's more of a long-term thing. There's still a very big crop, a very big old crop, I should say, that is helping to keep a lot of pressure on coffee at this time. So I'm still continued short-term bearish. I think that we're going to revisit that level. Next, 132.25 will probably be the next area that we'll visit. That's the next support area. Moving over to sugar, which last traded at 18.06 in the March contract, puts it up 10 ticks on the day. In the last video, we were talking about we should be able to violate that 1800 area, which is 1800 per metric ton of sugar. We did in fact do that, got down actually to a low 1767, took a bounce back up to where we're at right now at 1806, but the fundamentals are still pretty mixed to bearish. There was the Asian New Year last week, which helped to put some pressure on sugar. The dollar has been really strong, especially this afternoon. The dollar is very strong, and the euro has been kind of weak. So in that case, I think the market for sugar will continue to sell off slowly but surely. So I'm overall still bearish on sugar. Use some options, buy yourself some time. Lastly, cotton closed somewhere with last trading around 82, and that's 82 cents per pound, down 18 ticks on the day. I have been bullish on cotton. It's pretty much been moving sideways this whole month. Before in January, we saw cotton really take off and rally really strong. But you have a very large old crop versus some reports of planted area being dropped by the U.S. They're going to reduce planting for the new crop in 2013, somewhere in the area of a reduction of 27%. So that's where you're getting a lot of choppiness. The market's been moving sideways, kind of figuring out how to take all this fundamental news and put it together. I, however, am still bullish overall on cotton. I think there's a good, strong global demand for cotton. And I think the next area of resistance that we're going to visit is the top of that range that I was talking about, which is going to be 84. So once we break that 84 area, I would advise clients probably look at some bullish positions at that point. So if you do have any questions or you would like to know some actual strategies that you can deploy in any of these markets, you can contact me directly at area code 312-373-5392 or shoot me an email. Please keep in mind that futures trading does carry risk, and not all investors are suitable for futures trading. That being said, have a great afternoon.